Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a longer timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So, we have a couple of days back to back here where the market's trying to work higher after last week's pullback. And so I'm going to talk about one particular industry within that group of rallying stocks. And I've called this week, Everybody Needs a Little Love Sometime. And so we're going to cover off as crude oil continues the rapid ascent. We're going to look at some oil names. And one of the heady reasons I think that's important is that as crude goes up $1, all of these companies have a fixed cost structure, and so this actually generates more profit for them. And lots of people are worried that shale is going to come back online very quickly. There's a whole bunch of reasons that isn't going to happen quickly. But I'm not here to discuss the shale project. I'll focus a little bit on the price data, and we'll go from there. And for anybody who's interested, you could, if you're interested in the work that we do at gregschnell.com, feel free to head over to the website. I did some daily 5 charting videos yesterday, and on that I've done a gregschnell.com/daily5 discount, and you can go there and take a look at that program. But the general goal of the website is to try and keep you on top of the macro position, the understanding the background, and hopefully that'll help you have better timing. So most of the website readers were attuned to the market falling last week. This week the rally's going on, and we're going to cover that off a little bit right away. Anyway, so lots of different things there for you to consider. Anyway, if that works for you, head over there and check it out. Okay, I want to go in and start here on this chart. This is the Dow, and what we've got on the Dow is so 2 weeks ago, we made our high and we fell down and gently worked our way down. And now we've kind of come back up. I'd say we're in line with this downtrend. And we're working our way through it. And so the real question is, do we have enough horsepower to get from here up to here? That's another 400 points. Today we were up 500. So good chance that we could actually make that happen. Let's go look at the S&P 500. And our high was, so the Dow was, the high was 2 weeks ago. The S&P, the high was early last week on the Tuesday morning. And now we've come up and we rolled down and we actually closed below, I'll call it the last rally high. So we went above it and then closed below it. And we're probably going to open up a little bit higher. I'm recording this Tuesday night for Wednesday morning. Probably going to open up a little bit higher with the Amazon and Google earnings out. But again, we're up against this zone of resistance, so we'll see if we have any horsepower here. And then lastly, our good old friends in the NASDAQ. And you can see we were right up near the prior highs, so we're probably going to push that one through. And it's not uncommon for the NASDAQ to be the last one to make a high. It's a pretty powerful index. So underneath the surface of all of that, though, the point I want to make is that, I went back and looked and said, okay, just on Wednesday or on Tuesday, how many groups of stocks actually kept up with the index? And out of probably over 150 different charts that I've got defined as comparing into the index, only 27 of those actually outperformed what the indexes did. So as you can see, it was very narrowly focused, and out of the rest of the groups, they underperformed quite meaningfully. So it's that kind of thing where we have a few industry groups still continuing on, and for the most part, we have a lot of them that are starting to fall away. One of the top performing industry groups is now oil, and the reason I want to bring that to your attention is because there's big changes going on, and most people want to wait until oil starts to make new 52-week highs or whatever. But I think the real money's made while oil climbs out of the base cost structure. So let's just pick $30 a barrel or $40 a barrel, and then from there we start to work our way higher. And as we come out of this hole, every dollar pretty much goes all the way to the bottom line. And there's some taxes and some things like that, royalty payments that have to be stripped off. But for the most part, their costs are fixed, and now it's the move to the upside. And then the second part of that is, in order to keep going, they'll need to start drilling wells again and that kind of thing. The reason that they aren't crazy about drilling wells is the investment community really wants to see some return to them. So where the oil in the shale business, everybody was basically bringing in money as quick as they could and spending it as quick as they could to ramp up their production. Now what everybody's focused on is ramping up their profits. So it's quite a bit different than it was. So let me give you some idea. Lots of people think we're really oversupplied on crude oil. And this is in the U.S. And the point I want to make here is we're back inside the 5-year. We're not very far from the middle. And I think more importantly is you can see that we're in a huge downtrend of days of supply and crude stocks. So we're actually working our way quite a bit lower quite rapidly. So Goldman Sachs has already come out saying they think Brent crude could be $65 by the end of the second quarter. Well, I think they said West Texas could be $50 by the end of the second quarter, and that was in December. Well, here we are leaving January, starting in early February, and we're already at 55. So most people are underestimating how much oil is coming out of supply worldwide, especially. And one of the big things that happened was Saudi Arabia invested in oil companies all around the world as the stock market was near its bottom. So they have really low costs, but even if these charts all start to go up, Saudi Arabia is going to get a multiple not just on the crude oil, but on all of these oil companies actually starting to climb higher again. So they don't necessarily need to produce a lot of oil. They need the price to go up meaningfully to generate revenues for them from all of the shares they bought in companies worldwide. And they bought Canadian, U.S., European, Russian. They bought companies from around the world while they were beaten down. So they've already decided to do 1 million barrels a day voluntary reductions on their own, over and above what their OPEC model would have said. And one of the things that's done, literally since they've done that, is jam the price up $10. And now that the price is floating around $55, for these companies, there's some bigger oil companies that are producing 1, 2, 3 million barrels a day. So if you're producing, just pick a number, 1 million barrels a day, that works out to $365 million extra per year per dollar of oil. Annualized. So when you take $10 million or $10 a barrel and multiply that out, that works out to 3.6 billion for a company making 1 million barrels a day. That's a lot of upside, and quite frankly, the stocks are still beaten down. So it's one of the reasons I think it's pretty important. So this is the situation for crude oil. I've also got the situation for gasoline here. And you can see in gasoline, we're actually in the lower half of where we would normally be at this time of the year. We're almost at the lower bound, so that's quite interesting. And then when we get to distillate, which is diesel fuel, heating oil, trucking fuel, whatever you want to call it, jet fuel, all of these things are interrelated. So what we kind of want to look at is what the whole volume is doing across the big three. So gasoline, diesel, and crude oil. So rather than watching just one, we want to know all three. And what you see here is we're in the higher part of the 5-year range, but we're actually declining again. And so all of these data points are starting to line up that we could get very bullish here if we just get back to the averages. So now I want to show you a couple of things. So what happened in the last 2 weeks here, crude oil actually started to decline early January, even though the stock market rolled over in late February. Crude oil was already declining in price. That's these brown buttons here. heading into the COVID crisis. So they were starting to see the problem worldwide, and crude oil was starting to be priced down. Well, what happened now is we're actually at a point where crude oil this year is higher than it was a year ago, and that's especially true today. So I'm recording this again on Tuesday night, and crude is trading over $55 for the first time since it fell January of last year. And the more important part about that is, though, gasoline is also higher than it was a year ago. And we're starting to see heating oil's got a little bit of room yet to go. But both on the raw products and on the refined products, we're starting to see these numbers improving from a year ago. So all the comps are going to start improving, and their numbers are ramping up. So again, here's crude oil, 5-year range, just a real quick view. But what you see is we're not very far away from the middle, and we're definitely on a significant decline. Just in this little part right here from November 1st to January, we've seen a significant move for crude oil from the high 30s all the way up through to $55. So I think there's a real opportunity here to start to see the multiples of all of these oil companies spin higher. And that's what I wanted to cover off with you today. So the best way to do that, what I did was just, I had a scan that I ran about a year ago and called it U.S. oil and gas over $3. Some of the companies are below $3 now. And Tellurian just got above $3 recently. So here's the scooter ranking. And again, if you think of price action on all of these stocks, we could also add one more column here. Let's just add the universe. And so these are small, large caps or whatever, but here's Cimarex Energy, a large cap, and the scooter ranking is 94.7%. So it's behaving better than 95% of the large cap stocks out there. That includes technology and a whole bunch of others. Here's Diamondback and Devon doing very, very well. And again, they're all just starting to lift up now. So this page has a lot of stocks on it, but what you'll see here is just to get into the 75 range, we're limited, but you'll notice a whole bunch of the small ones are really starting to outperform. And as we get farther down, we're starting to see some large and mid caps. And as they move above 50, that's kind of important. I like it actually when they start to move above 25 and keep going. But when they actually start moving into the top here, into the group of 75% and above, a lot of times I find they can accelerate from there and then spend a lot of time up there. So we're going to focus a little bit on that. But in general, if you'd looked at this list in October, there probably wouldn't have been any stocks, or maybe one or two, with any sort of a higher ranking, scooter ranking. And now all of a sudden it's really starting to outperform. So that's one of the reasons that I wanted to bring it to your attention. Again, crude going through 55 now. The look for June, I would say, is closer to 60, if not 65. And there's some talk about $80 in the fall. We don't even have to get there. As all of these companies start to reprice and people start to realize the rate of change that they're going through in their earnings. So again, if you're going up by $10 on a company that makes 1 million barrels a day, that's a $3.6 billion revenue change and profit line. So quite radical improvements. So let's jump into it now, and we're just going to work through some of these charts. I want to show you how important it is. So what we see here is the scooter ranking was down around 25, and as they start to pop up, this is really where we want to start to get them. So this one broke out from $2 just 3 weeks ago, but making higher highs and higher lows as it goes. We'll find out if it can keep doing that this week. Look at the volume that's starting to show up. There's some people interested in this, and this is from $2 to $4 was a double in a couple of weeks. There's still opportunities to get this up to a double at $8. Remember, crude oil is just getting back to new 52-week highs. And as it does that, these stocks are probably going to go back up to where they were. So this is $8. It's trading under $4 now. That would be another double at least. So here's SM Energy. And again, you can see all of the oil companies were having trouble with the change in shale production heading through 2019 and 2020. But the big change now is this focus on generating actual cash in the company, paying down debt, returning money to shareholders, not so focused on cranking up the production and trying to push down the price of oil. So what we see here is the Scooter ranking surging up in early November. It's been sitting up here, but just walking its way higher. And you can see it was a $2.50 stock as it started to break out in November, even $1.50, and now it's already $7.50. So we've got lots of room to go, and people are wondering if the move's over. I still think this one's trading whatever, $9. Here's a $12 target for when crude was at the same price last year. It's another 50% higher from here. So these have lots of room to move. And again, these are the ones that have already started to move. Here's Cimarex Energy, and you could start to see it waving its hand, pushing higher. $50 was the recent high. 53 was the high a few years ago. But look at the Scooter ranking, one of the top ranked stocks in the market right now. DCP Midstreams aren't going to be the first place I want to play, but these are high yield, 9%, and it's pushing up higher. It's up around 20. It's been as high as $24, and $22.87 was its prior high. So this one's already been making 52-week highs, which is quite remarkable if you think about the oil business and how beaten down it was. So Silica Holdings, this is a sand company that makes fracking sand. So when you crack open the reservoirs and want the oil to run out, you put the fracking sand in there to hold the reservoir open. What we see here is the stock got up to $10. 2 years ago it was 18, and crude was tracking in around the same price. Actually, that was one thing I wanted to do. This is the ribbon of crude oil going higher recently, but let's just put on a kind of a 3-year chart of crude oil. And the reason I want to show this is lots of price action. Maybe I'll even just do it this way. Get rid of the log scale and get rid of all my indicators. And the idea being, I just want you to see that the stock spent a whole bunch of time, or the price of oil spent a whole bunch of time around $58 if you just wanted to pick a mid-range. And in 2018, it was a little bit higher. It was up around $65. And when we look at those prices, that's very significant, obviously. So again, when you're at $40, each one of these barrels generates over a year $365 million for a company making 1 million barrels a day. And, here's $74 not too far ago, call it a little over 2 years ago. So if we were to get up anywhere near there from $40 that we were at last November, let's not call it a double, but a significant number, you can see the cash flow to the bottom line of these companies would change remarkably, and all of a sudden we're seeing the analysts re-rate this. We're seeing Goldman, JP Morgan, all the big analytical companies talking about the price of crude going through prior highs and that kind of thing because of the slowdown in production, and we've lost a whole bunch of companies. But you can see why crude's pretty interesting at $55. If we can get through there, I think that's a meaningful place to expect a big breakout from this downtrend. So that's one of the reasons that we want to stay focused also on this crude. $02.02, and let's go back into those price charts. Okay, so looking at DCP Midstream, here's the frac sand again, $32, so that would be a triple to get to 2 years ago, and almost a double from here to get to the $18. Western Gas Partners, this was $5 back, I'll call it in early April. It got down to $2. It's already at $15. And you can see we're just starting to break out. And if we're getting up into these higher prices, for crude oil. Can these things double from here? I definitely think they can. Texas Pacific Land Trust is already at a level of starting to break out to a new high. And one of the things people are talking about is, the governments are changing their philosophy and they want to restrict drilling on federal lands or whatever. That actually pushes up the price because it makes it less reservoirs to go to get it. And what we find when all of these companies start to change their drilling, if they've drilled all their tier one locations and kind of working on the second best and the third best, they have to spend more money and get less oil. So if you restrict the number of places they can go, so they can't go to the Arctic and they can't go to federal lands and limit them offshore and that kind of thing, you're just going to force the price of oil higher. So here's Texas Pacific Land Trust, as I said already, at 52-week highs. Here's Diamondback Energy, one of the real popular names, and it's just started to get a scooter ranking above 75. You can say, it's starting to move up here, but at $60, it's just getting back to where it was in June. Crude's a lot stronger than that. So can this get back to $93? I think so. So that's almost a double from here. Sorry, not crude, but the price of Diamondback, can it get back there? And then when we look at Devon Energy, big down sloping trend line and just starting to test that trend line, and it should break out here any second. As it starts to pop through here, we're up against the 10-week moving average. $17. It was at 25 at the beginning of last year. So can it return to that now that crude's at the same price? I don't think that's a stretch. So you're up another 50% from current. They actually changed their corporate name. So let me just update this file. Ovintiv. And what we've seen here, a big downtrend, but this one is starting to break out as well. It's $17. It was $23. So again, another 50% upside. And as crude continues to move, you can see Scooter ranking's been pretty strong on this one. Looks like it wants to keep on going. So here's Chart Industries, and they're trying to do a whole bunch of stuff in the renewable fuels, energy, less carbon intensive, carbon capture, that kind of stuff. So this chart's been on fire as part of the ESG trade, as part of the low carbon trade. So really performing very, very well, up at $143, breaking out to new all-time highs. We got a PPO sell signal on here for the first time in a while. Matador Resources is already back to prior highs, so looking pretty good there. And again, some of these companies have merged and done buyouts and bought bankrupt assets and that kind of stuff. So what their prior capacity for drilling and that kind of stuff is in some cases much higher. And as these throttles or as the demand continues to improve, and again, crude and gasoline moving above prices from a year ago already, we're about to start seeing all of this swell kind of take place with higher volumes of oil in some of these companies. ConocoPhillips bought Concho Resources, and CNQ, one of the Canadian companies, I own it just for clarity, but as these companies have been buying and merging as price of oil has pulled back, I think CNQ's almost a double from the 650,000 barrels it was a couple years ago, and is now around 1.2. So really big changes in the production volume, and obviously that's going to change their revenue and their profit models out on the far side. So don't assume that what was happening on the left-hand side of the chart, if they've done any mergers and acquisitions and cleaned up their balance sheet, it's pretty impressive. What we see here for Crescent Point Energy, this company does a lot of stuff up around the Bakken area, which is in Montana north. You can see the momentum indicators at the highest level in 5 years, and it's trying to break this big giant downtrend. Well, it's at $3. It was at $5 just the beginning of last year, so that's another 60% upside from here. And if we can get anywhere back into the prices of a few years ago, this could probably make bigger moves. This RPC, oil equipment and services, just starting to break out of this base. How beautiful is that? This thing just getting above $4 here. It was $5.35 at the beginning of 2020, coming off a big downtrend. I like the fact that it's above its 40-week moving average and looks like it wants to keep going higher. That just looks good. Scooter ranking just moving above 75. Matador Resources, you can see starting to work its way up, so this is looking pretty healthy. Here's Earthstone Energy, nice little pullback to the 10-week. Looks like it's ready to surge and then take out its prior high, be making new 52-week highs as it gets up over this 688. And it wouldn't take much to get almost 2-year highs here at 7. So lots of rooms to move there. SAS Oil, trying to break through this $11 level. That'll be new 52-week highs. Core Labs, doing lots of analytical work, trying to get through here. It's trading at 40, was 48, was 72. There's some real numbers there that the stock could move up. Here's Tidewater. I didn't like the trend for many years, so I'd probably let that one slip. Occidental Petroleum, this one did a big merger and then all of a sudden the price plummeted, so they really had some headaches there. But if they can start to see this turn up to the high side from $20 to get back to 42, that's a pretty quick double. Okay, so we're starting to get down here. Scooter rankings around 73. And again, we kind of want to look at stocks just breaking through the 75 level. Here's Patterson. Wouldn't take much to start turning up, and that's oil equipment and services. Transocean, offshore drilling, $3. It was $7 a year ago, so there's a double. Par Pacific Holdings, sitting in around $14, consolidating. It was up around 26. Can it start to turn higher? That would be a nice lift. PDC Energy, again, just gently climbing higher, kind of broke through this $19 area, got up to 25, pulled back. It's sitting right on the 10-week. And if this can start to rotate higher, I think that's another opportunity for a new 52-week highs. And, a lot of scans are run by institutions for stuff making new 52-week highs. When they start to see some things starting to break out, they like that. Helmerich and Payne, this one, same thing, in around $25 right now, 41 a year ago. That looks pretty good. Marathon Petroleum, always a pretty good name. And you can see they were having trouble in 2019 as well. There was a lot of trade issues going on, and there was slowdowns in industrials. So some other consumption factors were starting to show up, adding more pressure to these. Again, I still think this is $45, could go to $65 and get back to where it was just late 2019. Sunoco, new 5-year highs. That stock looks very, very strong. Have to like that. And EnLink Midstream, very impressive climb off the bottom, $1 to $4. That's already been a triple. And now can it go from $4 back to $8 or something? I don't see that being horrifically difficult. Dorian LPG, want to see this one continue to break out. Stock's really been spiky, wide ranging every week. So we want to continue to keep an eye on that and just see how far it can go. Marathon Oil, what I like to think about here is, again, you're just breaking out of this base, $8. It was 14. I think there's lots of upside here. And a lot of the smaller companies actually could do even better than the larger ones, so feel free to kind of look down the chain a little bit. But there's lots of companies here where their scooter rankings just starting to jump into that 75 level, showing some strength. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern, and you can also see the recordings on StockCharts TV YouTube page. Thanks for taking the time to join me. Have a good week, and good luck out there.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.